Hello everybody, welcome back, and I'll have a look at just Bitcoin, just very briefly really. I mean, there's not a great deal to say about it. We've come down to the 40,000 wick here, but mainly we're still remaining above the 41,000 area of the upper zone of accumulation. The entire area here is still the accumulation zone, and we did poke our head above it just ever so slightly. This is what I would call the liquidity grab that we were waiting for. This is now continuation after being a rejection from the top of the accumulation zone, and we're still within the upper range of the accumulation zone. This doesn't mean that we have to stay in the upper range. We can come back down to the center. We can come back down to the 33,000. We could, obviously we could. It would remain accumulation for me. Now, if we look at it a little closer, I mean, this area, the 40 to 41,000 area, is pretty strong. We've got our top here, rejection. We've got our another rejection here before the launch, and then we spent a lot of time being rejected from it here. So basically, if we break down below it, it can offer a very significant area of resistance. And so we do want to really stay above it, because we don't really want to come back down into this major area of accumulation. A lot of the price action took place within this zone, and if we come back in there, I imagine it's good for people who want to accumulate potentially, but we don't. I'd like to see this resolved sooner rather than later, and actually get out of the accumulation zone for better, not for worse. So I mean, the daily is still holding on to that level, still above the 200 exponential for what it's worth, which is good. This bearish divergence may have just played out. This might have just been it. This could be it, or it could just be the start of something a lot more sinister. But for the moment, yeah, we've got lots of bearish divergence, then a big breakdown here, and a continuation vibe taking place on the daily. So it could go up, it could go down. We have to literally just wait and see. While in accumulation, it can be a very choppy range, and I suppose this is what we're looking at here, an accumulation choppy range. If we're looking at it in relation to the Bollinger Bands and all the other major moving averages, it's looking pretty sorry for itself. I would like to see it retest at least, at the next push back up to around about 44, maybe 45,000. This is where the green 50 exponential is, and currently the 10 exponential. But we are in a cloud. It is green, but I mean it's a cloud all the same, so offers a lot of pressure, downwards pressure at this level and below, obviously. Now let's bring it down to a smaller term time frame, see if there's any clues that we can find in here. The 4 hourly death crossed from yesterday, being rejected currently from the 10 exponential, so this doesn't look particularly good, I have to say. We are curling up ever so slightly, but there's not any positive crosses or anything taking place here that you could write home about saying this looks good. There's nothing, no telltale signs that there's going to be a bounce and a massive reversal from here. It does generally look like we're going to have a sideways and maybe sideways and down kind of vibe. Either way, I would expect us to remain in the accumulation zone for until further notice, really. The 4 hourly does not look good. It looks pretty sad. The last time we had a death cross like this was back over here. So we got one initial death cross here where we had continuation, then we pulled ourselves out, got a golden cross, and then finally got our final death cross here on the 4 hourly. This is where the major dump took place. So we have to recognise that that is a death cross, and we are having a continuation from that. The bears seem to have control in the short term, and we'll have to see if we can make a bounce up to around about between 44 and 45,000. Ideally, we do need to get above the 200 exponential. That is all the way up here at 46,500. That's a bit much to ask, definitely, at this stage. Now, if we continue down, or even just at this level, these will all move down, and these resistances will move down, which is bad in the short term, but hopefully you would argue that we'd like to reclaim those, and so the lower they go, if we just go sideways, then maybe we can reclaim them. And let's bring it to a 1 hourly, which is something I wouldn't normally do. So we can see the 1 hourly here managing to, just over the last couple of hours, reclaim the centre of this Bollinger Band. It's still looking pretty weak, but below all major moving averages of significance, the 200 and the 50 here. But we do actually have a bit of bullish divergence here, quite strong bullish divergence, I would say. So we've got the lows here forming lower lows, we've got high highs on this RSI. So this might give us the power to actually have a bit of a bounce today, and unless we're looking to retest some of these lows, really, which would be I suppose in the upper 30s, really, and then maybe that's where we would get our bounce from. Either way, the 1 hourly is the only time frame that's really offering us any kind of you could call it hopium, I suppose, and the opportunity for a potential bounce today. And if we think about the weekly, what we're looking at here is actually looking. I mean, we're still in the bullish portion of the Bollinger Band here. We're still above the cloud as well, which is okay. 200 here, 50 exponential here, and the 20, and this is the 21. So we're above most moving averages on the weekly at the moment, but it's looking a little sorry for itself, definitely. And we see the weekly hours MACD curling over as well. Not made a negative cross, and might not make a negative cross this week. We'll have to see where the price action takes us, but histogram tailing off and has been for the last couple of weeks now, so we'll have to wait and see how it goes. Like I say, the 1 hourly offers a little bit of insight into a potential bounce from here, but until we reclaim some significant zones and major milestones, don't be expecting anything massive up, and maybe not even anything massive down. We're kind of stuck once again in the accumulation range, and this is where we will remain until we break out of it one way or another. I can't say that we're going into a bear market. I can't say that we're going to continue with a bull market. But what I would say is that all previous models still fit, even though we are currently looking at a picture where we have a high and a lower high. We've got a low. What are we going to do next? Are we going to form a lower low, or is this going to be essentially one giant triangle formation that we'll be looking to play out? And if that is the case, then I suppose we do have an uptrend of support here, bringing us to around about 35,000 if we were to plummet down there this week, and so on and so on and so on. And so what we would be looking at, again, this is just very vague, but what we'd be looking at would be maybe something along these lines until we either break out or we break down, and that would be it. Bull market continuation or bear market. Like I say, all previous models still fit. So 4-year cycle and stock to flow ratio, they all still fit, to a large extent. I don't have these models tattooed to my forehead. I'm not married to them, but I stick with them because that's the strategy that I've gone with since I went hard and heavy into crypto since my last little rally in 2017. So I'll stick to my original plan, which is to stick to the 4-year cycle. But cycles break. I was saying it yesterday. Cycles can break. It's a young asset class, isn't it? Cryptocurrency. It's not that old. What was it? 12 years now. 12 years of history. It's okay. It's better than most of these shitcoins that we like to trade, but it's still not very old in comparison to any other asset class that in traditional markets. They've got decades worth of history, and within those decades there are failed cycles. And so we have to recognise that, of course, the TA and analysis, it does have it does play a major component into how we're able to trade these things, but it doesn't mean that it's a crystal ball. It's just a matter of balancing and narrowing the odds to get the odds to work in your favour. But it doesn't matter how many odds are in your favour, there's always a chance that it might not go that way. So we do have to always recognise that. But for the moment, it's not the worst thing I've ever seen in my life. And I was expecting, actually, we were talking about how dollar strength is going to correspond to potential crypto downside. Plus, being September, notorious for a bit of a downside a downside in the market. Historically, so there was a few telltale signs that we might have had some downside and there'll be a shock in the market, and there has been a shock. I mean, traditional markets have been shocked. Crypto has been shocked. It's all absorbed into the system. For those crypto fanatics out there, there's a reason that we like crypto. It's volatile, you get massive gains, but you also get huge plummeting collapses, really. So, but it's very much getting absorbed into the major system now, really. It is correlated with traditional markets in the way that they basically pegged with the Dixie, and the Dixie, the cash, the dollar, cash is king, and these are the little cracks that we were talking about on the live stream at the weekend, that when we're looking at potential entry points and good setups. I was saying let's hold off and wait and see how the Dixie goes into next week and next week from here. So over the next couple of weeks, we really do want to see how the Dixie goes, because not that am I married to this analysis either, but if we just move the Dixie over here to the weekly, I do expect a little bit more of a breakout from the Dixie. I don't think that this is the Dixie's top. It could be. I mean, historically, 93 and 93.2, which is where we've been rejected from here, has been a rejection zone around here and here and here and potentially here. But if we do have a breakout from here, we're talking about 94 and maybe even a wick all the way up to 94 to 95, basically. So that it looks to me like that, you know, we might not have even seen the Dixie breakout yet. And this is what I was saying to people yesterday on the Telegram and stuff. I was like, look, I mean, yeah, there has been shock that the dollar is bouncing, and the dollar is in an uptrend still. And in my opinion, we've not yet reached the target of where I would be comfortable buying the dip for crypto or going long. At the moment, it's still very much undecided, and I do want to see the reaction of the dollar. And this is going to be an uptrend until proven otherwise. And just like any chart, we can prove otherwise when we get a series of lower highs and lower lows. So what we'll be looking at here is that, yeah, potentially right now we are looking at a lower high. This is our previous high. We'll measure it from candle bodies. We've got a lower high at the moment. And these are our lows, which are at the moment higher lows. What we really need to do is form a lower low, which is going to be below 92.1, and then yeah, we could entertain the idea that the uptrend is officially over and a downtrend is going to continue. But for the moment, the chart does look okay, and I am anticipating a breakout for the Dixie, which is not going to look great for crypto in the short term. We'll wait and see, though. Like I say, we may be rejected from this level. It has been notoriously hard for the Dixie to break above 93.2. But again, I'm not married to the analysis, so I just have to wait and see how it goes. You know, wait for confirmation and then play the cards we're dealt. Anyway, I'll leave it with you there. But thank you for watching live stream tonight, and I hope you can join me. For those who are Patreon members, if you're not, you can join in the description below. Otherwise, join the Telegram. That's free, and that's all in the description below. Have a nice day, everyone. Take it easy.